Bloomberg captured the current market well in a statement that stocks climbed on speculation the economy is recovering at a pace that won't make the Federal Reserve imminently take away the liquidity punch bowl that has helped push the market to a record. And Friday's jobs report was just what the market ordered, not too hot and not too cold. It's what we call a goldilocks market. And with that, virtually all risk assets, including stocks, bonds, gold, and oil, were higher. As for the S&P 500, it rose for a seventh consecutive day, its longest winning stretch since last August. This also makes the seventh consecutive record high, which the market hasn't done since 1997. But the biggest news of the week is that I have become a legitimate YouTuber. I now have my first heckler, my first troll, George. Now, if you come across George's post, be nice because George just doesn't quite get it. George seems to be wrong on interest rates, Bitcoin, and now George doesn't get the concept of profits and gains. George, I haven't made a losing trade or investment in a long time. But it's not that I'm so good. That's clearly not true. It's because my system works. But equally important is that in this kind of a market, it's hard to lose money, so I'm not sure how you're doing it. But when the market changes, so will we. As for George, I'm not so sure. And with that, let's take a look at the charts. And today we're going to take a quick look at the 3-year weekly chart on the iShares Russell 2000 ETF, and the symbol is IWM, and this serves as a pretty good proxy for the Russell 2000. Now, we've looked at the NASDAQ, and similar to the NASDAQ and other stocks we've seen in the past, this formation here is the upper trend line moving on up like that, and then the top trend line is moving sideways like this. So it's beginning to form a triangle or a wedge or a pennant. Now, typically what happens is as a stock or indice cycles through into this wedge or triangle, the closer we get to that pinch point, then the higher the probability of a hard move either up or down. Now, I say that we're going to move on the upside, and I'll show you why here in a second. First of all, looking at volume. Volume's been dropping for the past several months or so, and that's not a great sign, but it's not significantly negative either. Into the MACD, here's what's interesting, is the MACD is forming a divergence in comparison to the price chart. So the price chart, again, is moving up into that wedge, but at the same time, the MAC, at least the fast line and the slow line, are heading on down. You see that the fast line moved through the downside of the slow line, heading on down here, but we're still at 7.86 on the fast line and 9.43 on the slow line. So we have a pretty good elevation above that zero line. And what that means is that there's still plenty of power left in the market. Moving on down into the histogram, you can see that this has a bottom and a basing, at least in the last several weeks or so. We have a few more weeks before we get to that zero line, but I think things are improving. And definitely by the price rate of change, you can see here a definite attempt at a bottoming and a basing here. We're at that zero line, and once again, that means there's some strength. So we're bouncing off that zero line with a sawtoothing, and I think the fast line wants to move through, and it will, in my opinion, within the next few weeks or so. Into the RSI, we're at a moderate 57.10, but we bounced off of that 50-year midline a couple of times here. So I think this is attempting to bottom and base in this area here too, which again is that midline showing strength in the market. Moving down here into stochastics, you can see that this has bottomed, based, and the fast line has moved up and through the slow line, and that's above the midline here. So good strength, wanting to run into that oversold territory, whereas the Williams already has. It bottomed, it based, and it ran on up into that oversold territory twice. So it wants to pull the rest of these oscillators up into their upper levels as well. Back up here into the max. To me, this is the primary oscillator that I look at, and it's made several attempts to move up, but it hasn't been successful. It's not really credible yet, but I think it will here in the next few weeks or so, as shown by the other oscillators. And if it can do that, if the fast line can move through the slow line, then it's going to be a very interesting market to watch. So, for most of you, I wish you patience and prudence. And for George, don't know what to tell you, George. And for today, that's ChewDog Charts. Thank you.